Hey everyone, Drew Creekmer here, and in today's 5-Minute Finances, we are going to talk about a topic that creates a lot of conversation, a lot of vitriol, a lot of back and forth for a lot of different reasons. And so today we're going to try to get to the brass tacks, the most important things that you need to know or think about in relation to life insurance. Now, for those of you who have worked with us in the past, you know that life insurance is part of the financial planning topic. However, due to some aggressive sales tactics from insurance salespeople, life insurance has been used or sold for an incorrect purpose. It's been sold as a silver bullet to some people. You can get the return of the market with no risk, and you won't lose any money, and you'll have a death benefit and tax-free income. And while there's maybe some grains of truth there, that is not 100% accurate or 100% correct for each individual's financial situation. And so what is really important to understand about life insurance is who needs it and how much do you need? And what are your options to get it? And so who needs life insurance? That's pretty simple. It's individuals who have a family. You maybe have some kids that are under the age of 18 still in the house. Or maybe you're a business owner who has a number of employees who depend upon you for their financial well-being. Or you just have some large financial obligations that you need to ensure are taken care of if something were to happen to you. Now, the question of how much do you need is a bit murky, but we're going to try to do our best. So at a high-level overview, a great rule of thumb, a great starting point is the 10x rule. If you just simply say, hey, you know what, I make $50,000 a year. 10x of that is $500,000. Therefore, I need $500,000 death benefit. Now, like I said, that's a great starting point, but one size does not fit all. And here's why. A couple of different sites I look into and I read on a regular basis have argued that you should have $100,000 of death benefit per child or per dependent that you have. Well, the 10x rule doesn't factor that in for you. Now, let's look at what we like to use. And this acronym is DIME, D-I-M-E. The D stands for debt. Consumer debt, maybe you need debt that might occur if you were to pass away with funeral expenses. I is income. We typically recommend that you replace somewhere in the range of 5 to 15 times your income, depending upon your individual financial situation. The M, that's your mortgage. Pretty self-explanatory. If something happens to you, you want to make sure that your mortgage is fully paid off so that your dependents don't have to worry about it. And the E is education expenses. And so if you have kids at home, this is an expense that you want to make sure is taken care of. You pre-fund it. And so DIME is a more encompassing way to look at how much life insurance do I truly need. Now, when it comes to how do you cover yourself, what are the tools that are out there, this is a topic that we could spend a ton of time looking into. And every situation is different and unique, and so there may be a different tool that is right for your situation. But at a high-level overview, let's just talk about term insurance. Term insurance is often used because it's very cheap for you to purchase in terms of how much your premium would be every single year. For example, a 40-year-old who is of standard health would be able to purchase a $1 million death benefit over a 20-year time period at roughly $1,200 a year. That's a really, really cheap cost for the return in value if it ever is needed. Now, we hope that doesn't ever have to happen, but if it does, that's a great investment of that $1,200 a year. And so what I would encourage you to do is to sit down and think through your own individual situation. And if you think that insurance may be something where you're undercovered, give us a call. I would encourage you to work with someone who's a fiduciary financial planner. And in order to be a true fiduciary, you need to be working with someone who has a certified financial planning designation or an advanced degree of another type that holds them to a fiduciary standard. If you are working with insurance salespeople, their obligation, even though they may say it's to you, their actual legal obligation is to the insurance company that they are selling a product for. And I can show you where that is in the law. And so really make sure that you're working with someone who has your best interest at heart. From our standpoint, we've done that for 25 years, and it's something that we'll walk through with you. And we'll be upfront with you, just like we are in all areas, and say, hey, you know what? You do need insurance. You're undercovered. Or like a conversation I had last week where I just told someone, you know what? You're self-insured. You have no debt. You've taken care of saving your funds. You don't need life insurance. That would not be the best use of your money. And so once you've taken the time to think through your individual situation, if you have any questions, reach out to us, leave a comment, shoot us an email, give us a call, and our advisors would love to chat with you about if this is a good fit for you or not. Once again, guys, thanks for the time. Hope you learned something new. If we can do anything to help you out, don't hesitate to reach out. Have a good one.